The global economy has been very interesting over the past couple of years. We've had a couple of really big shocks. Initially, we had the Trump tariffs, then we had the COVID lockdowns, and then we had inflation, and central banks have tightened interest rates very aggressively. Most people a year ago thought that we would have a global recession. Remarkably, in the last year, global GDP grew at about an average pace. So I think that we need to start changing the narrative from one of fragility to one of resilience. In terms of the next year, growth has slowed down a bit, but it looks like it's basing out. And I expect manufacturing in particular to recover, and Europe is recovering. And I think that means that global growth, if anything, speeds up in the next year rather than slows further. So Europe did have a recession last year, but it was actually pretty mild. And given the magnitude of particularly the energy shock and the monetary tightening, I think that was a remarkable outcome. And the positive is that growth has returned already this year. I do think it will gradually speed up over the course of the year. There are still risks, but the ECB has begun to cut interest rates, so I think that the worst is probably behind us. Obviously, markets will be focused on elections. In the very near term, the French election is causing some volatility, but again, I think that will pass. And as we move into 2025, I think Europe's in a much better place than it was this time last year. Whereas Europe went into recession last year, the big outsized surprise was the United States. So rather than slowing down, even though the Fed took the Fed funds rate from 0 to 5.5%, growth sped up last year. So it was quite remarkable, and people are talking about US exceptionalism again. As we move into this year, it does look like the US is gradually slowing back to trend. That's a healthy outcome. If it slows more, the Federal Reserve will start cutting interest rates, but at the moment, the US is in a very good place. One of the key takeaways from what we've seen in the United States is I think that we're going to have to reassess what is the equilibrium interest rate. In the last decade, Larry Summers famously talked about secular stagnation, and interest rates continued to fall in real terms over the decade. But it does look like we've had a reset. It looks like the long tail of the financial crisis has passed. So my expectation is that interest rates will probably on average be higher in the next decade than they were in the last decade. China again has been very interesting in that last year people were very pessimistic on China. In large part that was because they are having a very big housing bust. In fact, the housing bust in China is looking awfully like, in terms of magnitude, the housing bust that the United States had in the lead up to the GFC. But the difference is that the financial sector is more resilient in China, and in particular it's government controlled. So I think the probability of a broader economic issue is much smaller. And they've also been propping up activity by leaning very heavily into the energy transition. So last year, the United States installed 40 gigawatts of new clean energy. In China, they installed 290 gigawatts. It's an enormous result. It's going to cause trade tensions as they sell some of these products into global markets, but that has underscored the outlook for China, and I think they're going to be okay this year as well. As often happens, Australia is kind of halfway between the United States and Europe. Growth has slowed down. Basically, it was stall speed in the first quarter of this year. That is necessary. I think we need weak growth for a period to get inflation back down, but that process is working. I do think that growth was weak again in this quarter, but will pick up a bit in the second half of the year as the tax cuts come through. But the key for Australia remains inflation, and it has been sticky. I think it will be sticky. So I don't really expect interest rate cuts in Australia until much later this year, or perhaps into 2025. 2024 has been extraordinary in many ways, and one of them, of course, is that there are elections in lots of the big countries. So we've just had the Indian election, France is about to have a parliamentary election, the UK is having an election, but the big one, and the one that will move markets, is of course the United States. It's very uncertain, it's too close to call, but as we get closer to that second Tuesday in November, undoubtedly people will spend a lot of time analysing what could happen, what the policies will be of the different candidates, and what that could mean for the economic outlook and for markets. In summary, it's been an extraordinarily interesting period. We've had some very big shocks. People were worried that they would have a very big impact in terms of global recession. But in the event, the economy has turned out to be much more resilient than people had feared. I think the worst is probably behind us, and I do think that growth will gradually return as we move into 2025.